I had a client come to me earlier this year. Business was good. Revenue was up, cash on hand was doing brilliantly, and they wanted to take the leap and buy an investment property, something they'd wanted to do in a while. Equity was ready, they knew the area, who they wanted to buy with, they'd been watching the market, all good. Except one thing, their accountant had done an excellent job, genuinely done an excellent job. They'd written off everything legally available. They'd done a really great job of minimizing their tax. Beautifully. On paper, their income looked modest, and the bank agreed. And so we were forced to get a low doc loan and make a few sacrifices on the asset and the cost. But the worst part, if we'd actually had a 15-minute conversation 6 months earlier, before the tax strategy was locked in, I probably could have done something about it then. And so that's what this video is all about. If you're self-employed and if you've got a tax planning meeting coming up, here's what you need to know, and here is what you need to have on the table. And also, while we do that, a little bit of an insight into actually the conversation I have with my accountant every year, if not more often. All right, so some of this, it's just not obvious, okay? Most people go into tax planning meeting thinking about last year's tax return. How can we maximize last year's income? And what I want you to be thinking is reframe that and actually go, well, what am I planning in the year ahead? What is happening next financial year? Are you planning, to buy a new home, invest into more property, invest into shares, debt recycling, upgrade your home, refinance, rough time frame that you're going to do that? Are you looking to maybe minimize your tax through investing? Because if any of those answers is yes, your accountant needs to know 2 specific things from you. First one is, when do you need your tax returns completed? Not lodged, completed. Because we can work around the lodgement date. They can play their games until March, May, whatever that looks like. We just need a letter confirming the returns are final and that will be lodged as is with the taxable income. What we can't work around is draft financials that aren't completed. 2, roughly what your income needs to look like on paper. Here's why that matters. Depending on the lender and the solution you're going for, a bank can actually use 3 whole methods to verify your income. That is way more than PAYG, people, by the way. Self-employed, we've got it lucky if we do it right. Now, it's either an average of your last 2 years of tax returns, your most recent year only, or your BAS statements, your business activity statements. It's a real-time picture of what the business is actually doing. Now, each method gives a different result. Sometimes a significantly different result, different borrowing capacity, different rates, sometimes a different cost altogether. Quite simply, if you've got net profit of 100 grand, you're paying yourself 100 grand, it's actually costing the company 100 and whatever, 12% extra with super. And so what path is available to you and which one is the most favorable depends entirely on what your numbers look like. And some of that is influenced by decisions made in the tax planning meeting. A lot of them are. And so if you know what you're borrowing in the next 12 months, that's not a conversation to solely have with your broker after the returns are lodged or completed. That's a conversation to have now. And with trust and deeds and lodgement dates and meetings, you've got to have it earlier than you sometimes think. Your accountant's job is to minimize your tax. That is what they're great at. And they should be doing it. But every dollar that gets legally written off reduces your assessable income in the bank's eyes. And those 2 goals, minimize tax, maximize borrowing, they're in direct tension. And nobody in the room is going to flag that conflict unless you bring it to the table. And the question that I want you to ask your accountant explicitly before they finalize anything. I'm planning to borrow in the next 12 months, and before we lock in our tax strategy, what does our approach do to my declared income? And should my broker be involved in this conversation? That one question can change the outcome significantly. Now, if your income does flow through a company or a trust, this one, it's important, right? A lot of self-employed clients I meet assume retained earnings sitting inside a structure don't help them with the bank. And it just couldn't be further from the truth. We can actually use your retained earnings to support borrowing capacity in the right structure with the best lenders that we work with. And you're not compromising on that lender choice. But what I really want you to think about here is the cash flow conversation. What does your business actually have available, and what are your commitments? What's your affordability from a cash perspective, not just servicing from a tax perspective? What do you have cash on hand? And make sure that you're having that conversation with your accountant, not just how do we minimize tax and reduce the bill because we haven't saved enough for it. But what does the business cash position look like for the year ahead? And what does that mean for what I can actually do? If you're anything like me, sometimes I just need to get a bigger need, so I'm not spending as much money because I've disguised it as investing into the business. My bad. And then my last point is really, really simple. Do some admin, do some operations. It matters more than you probably think. Get your books up to date and keep them there. When you apply for a loan as a self-employed borrower, lenders don't just want your tax returns. Sometimes, if that's not doable, they might need BAS statements and a P&L. And sometimes business bank statements in very rare cases. And so if your bookkeeper is 3 months behind, if your BAS is outstanding, and if your accountant is still reconciling, I've got bigger questions about what reporting you're using to see the health of your business, but that all just creates delays. Sometimes at the exact moment, you need to move quickly. To give you an idea, I'm chatting to my accountant right now about getting my tax ready in July and August for a planned move while the market has regressed. That's where we're at, and it's powerful for them to know that they can schedule it ahead. And heading then into the new payday super requirements, having clean, current, reconciled financials is absolutely more important than ever. And this is not the year to be behind on your books because you're going to get whacked. Before the tax planning meeting, know your goals. Tell your accountant when you need the returns done and roughly what your income picture needs to look like. And ask the explicit question about your tax strategy and your borrowing position. Understand your cash flow, not just your tax position, and get your books current and ready to go. The accountant meeting happens once a year, if you're lucky sometimes. And the loan application window opens whenever you're ready. But it's built on decisions made in that room. And so if you're self-employed and you want to know what your borrowing position actually looks like now, that's just a 20-minute conversation after I stop talking. Sorry, not sorry.